Today we're going to talk about earned income credit. Make sure you have your book. We're going to be going through it extensively in tab I. This chapter deals with earned income credit. And when I think about earned income credit, what I generally think about is this right here. So earned income credit is refundable. That's a huge benefit for most people. And we'll talk about those income limitations and things like that in just a second. And it's available to eligible taxpayers who do not earn, this is imperative as well, high incomes. So it's generally for people that have earned income through a job or self-employment, or they're a contractor, anything that they earn that income through, and that they get a refund even if they have no filing requirement, owe no tax, and had no income tax withheld whatsoever. So they have a job and they, for whatever reason, had no income withheld at all, and that was okay. Obviously that's not a realistic expectation. This amount of this credit will refund them the amount of whatever the calculation for the credit will be. So it's a very, very popular credit for people that are not high income earners. Notice that we have children involved in the equation, but we're also going to learn that the earned income credit applies to people with dependents, and it can also apply to people without dependents as well. So here we go. We have some rules. I'm going to ask you to, we'll be flipping a lot through your textbook here. I'm going to ask you to turn to page I-2. I-2 shows exactly what is on this page, but in more detail. So if we're looking at page I-2, in the table at the top, we see part A. We have, here we go, rules for everyone. Column 2, which is part B in your textbook. Rules if you have a qualifying child. And part 3, rules if you don't have a qualifying child. So the first table is rules for everybody. Let's delve into the textbook instead of going into the slides here. So in rules for everybody, this means that this applies to everyone, obviously, whether you have a child or whether you don't have a qualifying child. So with that in mind, taxpayers and qualifying children must all have Social Security numbers that is valid for employment by the due date, including extensions. So what that means is that you need to be a resident, alien, or just a citizen to get this credit. Number 2, filing status can't be married filing separately. So if you're married, you need to file together. Also, of course, single, head of household, these things can apply as well, just not married filing separately. Number 2, you must be a U.S. citizen or a resident alien. And the other ones, the next one we're not gonna talk about because it doesn't affect us. Can't file Form 2555 related to foreign income credit. We're just avoiding foreign earned income entirely through the entire semester, since it's not something that we would have covered in simple returns as we would have done in VEDA. Next one is investment income must be $3,600 or less. And the last one is you can't be a qualifying child of another. I want to point something out here. Investment income must be $3,600 or less. I want you to turn over to page I-1, the very first page. As you look at the earned income table, and I'm going to hit this again a little later in our lecture, the items that constitute and qualify for earned income credit are on our left side. And if you read through that list, you're going to see that it's basically people that go to work. They earned some type of income. You notice that the very first row of the second column, it says these things don't apply for earned income, and the one there is interest and dividends. What it doesn't go tell you in that column is if you flip back to page I-2, notice it says investment income must be $3,600 or less. Well, on page I-1, it says interest and dividends. When you hear the word investment income, you should be thinking interest and dividends, right? Those are the two primary ways that people get investment income. So they almost look like they're contrasting each other. What I would say is that investment income that includes both interest and dividends, like you see on page 1, must be less than $3,600. Okay, so we're going to go with what we see in part A there and kind of avoid, or unless you want to write in your textbook there on I-1, interest and dividends that do not exceed $3,600. I think that's probably a better indication. In part B, column B, if you have a qualifying child, notice that that child must meet the relationship, age, residency, and joint return test, but not the support test. The child doesn't have to be your dependent. And that little 2 at the end of that says, to meet the joint return test, the child cannot file a joint return for the year unless it's claim a refund. So that's the exception. So the child doesn't have to be a dependent of you, and there's that stipulation down there. The stipulation is that if that child is being claimed by somebody else only to get a refund, there's the exception. Number 2, row 2, qualifying child can't be used by more than one person to claim the earned income credit. So for example, if you are a child of divorced parents, both sets of parents cannot use you for the earned income credit. The taxpayer can't be a qualifying child of another person. So if your parents are filing and trying to file the earned income credit using you as the qualifying child, but they are being claimed by their parents, maybe your grandparents, let's just say, as a qualifying person for them, that would negate this. Let's go through column C here. Rules if you don't have a qualifying child. So that means that the majority of people that are going to have this credit are probably going to be people that have qualifying children, but that doesn't necessarily mean that somebody that is single without a qualifying child can't claim this, and we're going to see that in column C here. So you need to be at least 25 but under age 65, and remember that that earned income credit rules still apply there. You can't be a dependent of somebody. You must live in the US for more than half the year, and you can't be a qualifying child of another person. So with that in mind, we're going to look at the income limitations that you see on the bottom as we start to get through that table in the center of page I-2, but I want to show you something that I enjoy a little bit better than reading that table. Here are some of the commonly common EIC filing errors. Of course, not reporting income, putting it wrong social security number, all that jazz. I think that those are pretty common among any tax return, so I'm not going to cover those. Those are pretty self-explanatory to me. So, rules for taxpayers with qualifying child. Claiming a child who is not a qualifying child is one of the most common errors. And I would kind of write on there that the reason is for that is because of divorce. So for example, if you haven't worked out with your divorced spouse who is able to claim that child, and you both do, I've said this before at the beginning of the class, the IRS is not going to really care. Like if you've claimed it first, you figured out your tax return first, and you claimed a child, and then your spouse does it maybe right before the deadline, and they claim the child as well, and they claimed second, of course, the IRS is just going to disallow it for this second person. I'm not going to go back to the first person and try to work out your problems, right? Just another reason not to procrastinate in general, I suppose. So let's look at some of these requirements and where you can find them in your textbook. So this one here, summary of EIC eligibility requirements, part B, is where we were just a second ago. So you're on page I2 in the middle column, column 2 in the center column there. Review that for this. EIC general eligibility rules is on your next page. It's page I3. The next one is EIC qualifying child chart is on page I4, and qualifying child of more than one person is on the bottom of I5. What I would do with pages I3 through, definitely through I4, and then the top of I5, I think it might be helpful to study is if you start on let's just say I4 because I'm on that page, I would cover up step 2. For example, get a piece of paper, cover up the rest of the page besides step 1, and ask these questions yourself, and ask your question, when you ask yourself this question, kind of envision what you're going to see through the next steps. Let me give you an example. Step 1, does your qualifying child have a social security number that allows him or her to work? If no, they're not valid. If yes, move along. So I would cover up the next step as well as what you're expecting to see on the right-hand column. For example, right now, I want you all to do it with me, I suppose, is I'm taking my hand and I'm covering up the yes, no on page I4 and trying to envision what would happen next. Does your qualifying child have a social security number that allows him or her to work? If your child has a social security number, hopefully if you say yes or no, you would automatically be covering that up. I want you to think about what meaning yes means and what meaning no means. For example, if I say no in my mind, does that disqualify earned income credit? And then I could see if that is something that applies. That's kind of a great way to practice some I was just to say using a method to determine whether you're understanding all of the stipulations or not. These requirements here are when we look at the column on page I2, right? Ones without qualifying children, they have this marked B if you have qualifying children, and the next one's if you don't have qualifying children, that's column C. They highlighted column B, but that's not right. Must be 25 to 65 and so on. We've covered that. Calculating the tax. We are not going to calculate the tax. And the reason we're not going to calculate the tax is one, it's 4 pages long. So we're not going to calculate it ourselves. You're not going to have to calculate it on the exam. We are not going to cover publication 596. We are not going to cover disallowance of the earned income credit, which means that you can ignore page I6 in your textbook. So that's I6 that covers this, and we are not going to cover that at all, disallowance and credit carry forwards and all that good stuff. The reason I also don't want to do it is because this is automatically calculated by TaxSlayer. Unless you're in a very advanced tax class, it'll be very difficult to determine whether earned income credit has been calculated properly by TaxSlayer. It automatically pulls in all the information that you've asked in your multiple choice type questions, right? Which one of these qualifies, single, married, all of those types of things. So we're not going to do that. Oh, that's no good, huh? And that kind of summarizes it for us. What I want to point out here is some of the information that you have in your textbook. In your course, down here under Earned Income Credit, I produced the table down here, which I think is a lot easier to read than what you have in your textbook. So if you're on page I-2, Part D, Earned Income and AGI Limitations, it says the same exact information, but because I'm an accountant and I love tables and they're easier to read for me and hopefully for you too than information that's in paragraph or bulleted point format, this information that I have here is the same as the information that you have in your textbook, right? And I promised you that the last thing we would do is talk about the income in detail. I want to point out the difference between the two columns, and I want to focus more on what doesn't get included for Earned Income Credit. And you notice when you look down this list, it's something that I want you to think about. For example, highlighting bullet point number 2, if a person has Social Security income, welfare benefits, workers' compensation, child support, unemployment in there, disability insurance is on there. So all of the money received for government assistance or workers' compensation, which is a company provided benefit, anything you get that you are getting income for that isn't earned when you're not going to work, you're not able to claim in Earned Income Credit. And let me give you an example here. Let's say that somebody has is getting Social Security benefits. Let's just say they're single and they're getting Social Security benefits and what else? How about child support and some unemployment compensation? Going all over the board here. And that amount is going to be more than $15,570. Yes, I had to clear the drawing because it was covering up and I didn't like that. It was more than this amount. That person cannot claim Earned Income Credit because it's not earned, right? So what if the person has Earned Income Credit, like they're working part-time at Dunkin' Donuts and they receive like $10,000 a year, but they also get some unemployment insurance for part of the year, which that unemployment, let's just say, was $5,000, and they got another $2,000 for Social Security or something like that, or Medicare or Medicaid or something like that. So, you know, given this information, this is the only amount that would qualify for earned income. So in this instance, this person would not get the Earned Income Credit. So again, this is the tabled information. I'm not going to give you any homework this week. I'm going to put it in here as well. It's too difficult to give any type of homework when you have these two types of topics. Both the child tax credit as well as the Earned Income Credit are not calculated on tax forms. But instead they're on worksheets embedded in instructions and publications. So it's just too difficult. And since TaxSlayer calculates it automatically, there's no purpose in that. So instead what I want you to do, and please, remember in class how we always had to pinky promise, I'm begging you to please start studying. Today or tomorrow, I'm going to be posting. This video is being done on Tuesday. So either Tuesday or Wednesday, I'm going to post what you need to start studying for, the actual content of your exam, next exam, exam 3, so that you can start reviewing all that information. I would start using your time to do that. Obviously, you're social distancing and doing everything you should be. So what better time to get a great grade on the next exam? I will be online on Thursday. I'll be, just a general rule of thumb, here's how this is all going to go down. I'm going to do recorded videos because when I took the poll, the majority of you wanted recorded videos, which I understand. You can go back through them, but I'm also going to be online. So you're kind of getting the best of both worlds, I guess. So I'm going to record the videos. You can watch them, and I'm always going to be online every Tuesday, every Thursday at 9:25. So if you have questions, I'm going to beg you to log into that session to get them answered. I'm happy to answer through email when I can, but I'm getting, between all my students, well over 100 of them, I'm getting over 50 emails a day. So I'm trying to keep up with them, but if I can answer your questions in person through Zoom, you'll get a faster response, and I think it'll be a lot less stressful for each of us. So let me know what I can do to help. I know this is not easy to learn online, so I'm happy to help. Just let me know what you need. Take care.